Wrong frequency. Now it's set. No, it's all good. Don't mess it up. It's all good. It was on the wrong frequency. See?
Okay.
See right over there?
Okay.
I got tech support.
Yeah. If you're going into
Go.
the red here.
No, it's good. Give me, yeah. Hey, welcome to the Closing Beat. I'm incapable of doing anything other than investments. That's all I do. Or that, yeah, I like the comments there. Someone's shutting them down. We'll get started here. We're talking about the stock market here today. And I almost had to eat my words, by the way, because the market almost recovered, right? If you take a look what happened today. For a while there, I thought, oh man, I'm going to have to tell them I'm wrong. We almost recovered all of yesterday's losses. I remember one of the last things I said yesterday was, no, we're not going to recover all of yesterday's losses. It's not going to happen. And got to be honest, I was a little nervous there. But hey, welcome to our show. We are financial advisors here, not technical support issue people, obviously. And I appreciate you joining, dealing with us through all the troubles there. We've been good so far this year, by the way. Hey, we do other things that go much better. FinTips videos Monday and Wednesday this week. Monday, we talked about should you invest or pay off debt? Gave an exact case study there. Then yesterday we did how to use the bucket strategy. And later, if you're one of our customers, join us for Wine and Wealth. We'll be in the speakeasy over there. Grab a drink, hang out with me. We're going to show you how to use the dojo, all the different features in there now that it is live. And a lot of you are clicking around. We see everywhere you're clicking and the areas that need improvement, the areas that are going really well. Plus, we got new updates to share with you, so we'll do that there. Let's just go ahead and do it, right? We'll cover the Robinhood, Interactive Brokers, TD thing with GameStop. I don't know if you happen to hear, GameStop's been in the news lately, but GameStop pulled back $153 today, still well above where it should be. If you're on Robinhood, they said we're not going to let you trade it, sell-only orders, which I think was a little extreme. Typically, by the way, before you get all fired up and head to the message boards, it is very normal for a brokerage firm to restrict trading on a stock. However, it's how they go about doing it. So I've got deep knowledge of this here. This is my background. The way Robinhood did it is they said, we're not going to let you place new orders to buy, at least initially. And but if you own it, you can sell it. And so that was the extreme. That doesn't normally happen. TD Ameritrade and Interactive Brokers, I believe as well, what they do is actually very normal. It's just a one button press and they make it happen, where basically they say, if you own it, you can sell it. If you want to buy it, you're going to use your cash to buy it. And if you're trading in a margin account, you're not allowed to turn off and on between margin and cash. So if you're using a margin account, we're not going to require that your percentage of equity in the position is much higher. So it could be as high as 85%. And so, or even higher if they want. But so that's the normal type of restriction. So when you see TD and all these other companies restricting trading, the headline is they're restricting the trading. Well, Robinhood was the only one that sort of went crazy and went, as far as to say no new purchases. Every other company is essentially just saying, go ahead, trade it if you want to, but if you're on margin, it's going to be largely your dime if you lose. Now, there's a big problem going on with GameStop right now, which I think is going to be a big problem for people that bought it. Even after today, right? There's still, I think, a lot more downside to come, because the deal with GameStop now is you have all these people that bought it. I mean, I'm kidding you. I kid you not. A friend of mine, rocket scientist, works for a company. He's not really allowed to talk to the general public. I barely get to talk to him. Even he found time to text me from a number I've never seen before to say, hey, we see this GameStop thing. So imagine you got all these people going, GameStop, put me in. Let me get a few dollars in there and see what happens. Well, what happens when you chase a stock? Let's say it's Tesla, for example. You know how Elon Musk doesn't like the shorts there. He says, whatever, buy the stock. So let's say you buy the stock, it starts going up, and you're, getting one over on the big guys there, like they say, and the shorts have to cover their positions. Okay, that's great. Well, when the stock starts to fall, what do the retail traders do? They go, oh no, I didn't think it would fall. What should I do? Should I sell my position? Wait a minute, should I just hold it? Well, then in normal cases, you look at something like Tesla and you go, all right, I overpaid for it, but at least they're doing real work and they're trying to get things done and they're, 6 straight quarters of making a profit there. So yeah, I'll tell you what, I'll hang on to the shares. You don't have that with GameStop. Everybody's buying it because of the hype. And there will come a time where everyone wants to sell. Remember, the other day it traded well over what the S&P itself trades in an entire day. So what happens when those shares say, I'd like to sell, the stock's going down? There's no reason to hold GameStop. You are not holding GameStop at $200 a share and saying, well, they'll revamp their business, they'll grow one day and it'll be great. There's no chance of that, right? I'll bet anybody like that. That's not happening. So now when the stock starts falling, everybody that bought it that has a loss or maybe has a profit and it's starting to evaporate, now there's no question they are going to sell the stock. There's no reason to hang on to it. So be very careful with that. If you happen to be on a platform that's allowing you to buy GameStop and you're participating in that. Also be careful of the other ones too, because what they're going to do is they're going to make a list. In our research site, actually, we went through kind of breaking down how this works, and we covered some of the stocks, like your AMC, that are doing the same thing here. There's actually a pattern going on with stocks that are popping like this. American Airlines is one. We'll cover in a little bit. But it's the same thing. So brokerage firms are going to go to something like this and say, yeah, you can trade this if you want, but again, the margin requirement's going to be much higher. So same concept there. Does AMC have a viable business in the long term that if you bought it somewhere, I don't know where you bought it, are you willing to hold it and justify that value? Probably not. It's probably not worth that much and never probably will be worth that much, even if they get bought out. So be very careful there. Now, AMC was a little bit smarter. So AMC saw their shares going up the other day, and they decided, all the convertible note shareholders decided in unison to convert to common stock. So there was about $600 million in convertible notes. If you're not familiar with how that works, it's a way of owning part of the company, giving them some debt in exchange for the potential of converting shares in the future. You hope you convert them for more dollars, blah, blah, blah. So the idea here was they converted at $13.51. They're no dummies. These guys were brilliant. This is exactly what I would do. So you got $13.50. So they converted their notes to shares at $13.50, Class A shares. What do you think they did after they converted? Do you think they held on to those shares because they think it's worth $13.50? Not a chance. They were likely some of the sellers inside of there. They were, there's just no doubt. $600 million was sold at some point. Anyways, that's my little rant on that. Let's go over to the stock market here for today. We'll cover some of the other goodness and that craziness going on as we go. You got the Dow here, Dow flip-flopping between positive year-to-date and negative year-to-date. United Healthcare. There you go. United Healthcare was one of the leaders here today. Home Depot was also one of the leaders as well. Not really great. I mean, it was good days there. I would point out with the Home Depot thing, Lowe's is still kicking their butt. Did I pull up a chart? Yeah, here, take a look at this. So if we look over the last year, and let's just change it. Let's say January 1st, 2020, all the way to December 31st, well, first day of January, right? So last year, Lowe's handily beat the Home Depot in terms of performance. And we kind of pointed that out at different times, like, that's kind of odd. Normally, Home Depot outperforms Lowe's. Well, if you go through this year, just year to date, that's the same story, right? Lowe's is still beating Home Depot here. So if you have that investment or you've owned it or something carrying over from last year, you're still actually doing much better by holding Lowe's than you are Home Depot. Not that that's a Dow component or anything. I just wanted to point that out. Your biggest gainer today, I believe, was Disney. I was talking to a customer about this, where we said if you could get this in the low 160s, that it would be a good idea down in there. If it happened to pull back, just happened to do that. Great rally today, 5.5%. I owe you a Disney fun fact I will think about while I'm talking here. You've got the NASDAQ up 3% year to date now. Microsoft was the biggest contributor today. Comcast, by the way, we happen to own it. Super excited about that. That comes in a rare second place. Nearly hitting new highs. It looks like it's still starting to hit that. They had earnings coming out. Earnings look good. Also, internet subscribers were up like 540,000, somewhere in there. I don't know the exact number. I found it interesting that the Orlando theme parks down here that we happen to be very familiar with, back to break even. Right? So they're making money there. They're packed, by the way, the Orlando theme parks. So maybe they can move on to Epic Universe now, as that's pretty much a barren wasteland at the moment. Tesla down just a little bit on the day. Slight drag because of earnings there. They refreshed a couple of their models. The car's got the yoke steering now. That's pretty cool. I like it, actually. Looks just like our go-kart. They got the same steering wheel. Did you know that? It's the same.
I'm listening here.
You don't know. Nobody's paying attention to me. Yeah, let's move on. Why do I do this show? The S&P 500 basically just gave back more than half the day's gains there. It's up about 1% year to date overall. Microsoft, Disney, Comcast, big contributors. Look, there was a lot of these names too far, too fast. Lumen erases almost all of the last 2 days' gains there. It's a big deal, guys. You got to recognize when stocks go too far, too fast. I gave you a whole list of them yesterday from our new highs list. Look, they all did the same thing. Kroger with the big pop to new highs that reversed intraday. If you look at our new highs, new lows segment from last year, reversed course, that's a warning sign. Go in the dojo, watch the candlesticks videos. It's not magic or voodoo or anything, the fact that people look at candlesticks. It's just like looking at a receipt. if you were able to sit at Walmart and watch the receipt of all the items sold throughout the day, you'd eventually notice that, hey, wow, people are buying a lot of TVs, right? Oh, Walmart's making a lot of money. Their high profit margin products are selling a lot. That's all you're doing. You're just looking at a receipt basically in visual form, and each receipt or candle has its own story. So Kroger was down. Fox was down. Great reversal from yesterday. We pointed that one out. I think Iron Mountain was the other one. Same thing, right? Up on thin air, comes back, retraces over the next couple days. So that's what you have there. Going over to the sectors today, I'll stick here because I'm a little behind today. If we go over to the sector performance, you got healthcare. Well, it was a good day for healthcare, up 1.5% on the day. It was pretty much due to earnings. Right? You got a lot of earnings going on in the healthcare space. If I dive in here real quick, we just happen to own the top 3 performers today, so we're happy to see that. One-day performance, look at the best performers today. Hey, Biomed, Abbott Labs, and Algen. Actually, we own quite a few of those. So healthcare is a standout one there. If you go to financials here, viable pullback. Right? We talked about this, that viable pullback, looking at the 6-month chart here. Here's go like this. You got a nice little pullback in financials, which were leading the way. You know they're leading the way because you watch the closing beat, you hit the subscribe button, thumbs up, and all that great stuff. So you know that we've been leading the way here in financials. They just happen to pull back. It's a bullish, viable pullback. That continued to be the case to the 50-day moving average. Got a little bit of a bounce today, led by the big guys, the biggest contributors anyways, Bank of America, JP Morgan, BlackRock, American Express. You can see the list in there, but basically a really broad rally there. I have no issues with that at all. If we go over to industrials, so industrials races half of their pullback over the last 5 days. Great rally there today. If I zoom in just a little bit for you there. Comes in third place here today. American Airlines would be one of the focus stocks here today. We'll cover that a little bit later, but we were talking about American Airlines. Looking kind of unique yesterday. At one point, I believe it was up over 70%. Lastly, we'll go over to consumer staples. Not really a headliner today, but all the relative stock strengths were your gainers today. We talked about all these here. Great little pullback. The key to this lesson, actually the last couple days, if you want to learn about these pullbacks, the big key to this lesson was finding the stocks that were performing better than the consumer staples, but either were flat or just happened to be pulling back. Those were the big performers today and have been the big performers as well. Lastly, I'll go over to retail. If you have a retail ETF or any of those, you notice a little volatility. The XRT is 5% weighted to GameStop. I believe it's its biggest holding at the moment. And so with GameStop falling, that's the reason you see XRT, which I believe was its biggest up day, followed by its biggest down day, back to back like that. That's kind of interesting. If we look at some of the new highs, new lows here today, we got 11 new highs, no new lows. AT&T, by the way, AT&T is the closest S&P stock to making a new 52-week low, but it's got 10% to go. So every day I've been saying no new lows, no new lows. That right now is the only one that, Perigo is the closest, second closest. So they still got 10% to go. You're not going to see new lows here for a little bit. We'll talk about T. Rowe Price. You got that reversal bar. Take a look, right? Great day, everything looks good, but why did it fade away? You have more sellers than buyers, you had volume increase there. You do not expect this stock to all of a sudden go back to new highs based on today's performance, right? Microsoft is sort of similar, up 2.5% today, gets a little relative strength award there, but maybe a little extended in the short term. If it fell for a couple days, would anybody really mind? You'd be all right with that. Abbott Labs, great move here today, broke above new highs. We talked about this moving above this range earlier. Glad to see it up there, but as a long-term holder of Abbott Labs, I'm okay if it falls over the next couple days, and I sort of expect it based on it giving back more than half of the day's gains. A.O. Smith, this is kind of like a nice reversal award for this one. So even though it gave back more than half the gains today, right? If there wasn't a lot of volatility in the market, you kind of think it would have just been one of these days. Earnings gap here to the upside. I think that solidifies that this will stay in an uptrend or at the very least stay sideways for a while. And you got Biomed. We talked about that a minute ago. Same thing. It's a great day, but if you didn't sell today, first of all, not a big deal, but if you didn't sell today and you see all those sellers coming in, do you think it's just going to magically move to new highs tomorrow? I don't think so. I don't think that's the case, or I'll be shocked if it does, right? And I will admit defeat if that's what happens. What are we going to do here? Stocks in the news. Let's take a look and see what's going on in the stocks in the news today, and then I'll answer your questions. If you have a question, go ahead and post it. We'll take a look here. Yeah, Yeah, stocks in the news. So you got McDonald's back to the 200-day moving average there. Missed on earnings by 7 cents. Revenues came in as expected. Not a big deal, but that was an earnings-related stock for the day. You got Pulte Homes coming back towards the 50-day moving average. This was one of the earnings stocks I wanted to look at. Beat by 9 cents. Revenue stronger than expected. The bar set too high for them. They didn't quite come up with that, beat the hurdle there, I guess is the way to say it. Sherwin-Williams, good look at how people are spending money out there for fixing up their houses. Basically, everything was in line or as kind of expected. They beat on earnings, but there was no like blow the top off earnings. There wasn't a lot of great stuff there. So investors just saying maybe it's not worth $7.50. American Airlines, fascinating one today. So American Airlines comes out with their earnings as well. It's the most heavily shorted stock, most heavily shorted airline stock. Well, if everybody's angry at people that are short stocks right now and they're going to go buy those stocks, first of all, I can't blame them for buying American Airlines, right? But anyways, if you're looking inside of their earnings there, they've got cash burn is always a big deal or it's a big deal right now for the airlines. They are burning, just $30 million a day. But they've got $15 billion. They got a year and some change for liquidity, right? Being able to continue to operate. Stock was up really sharply pre-market. So that's that one. And Facebook, right? Facebook just dragged today on earnings overall. Monthly average, we talked about this yesterday. Monthly average users in line, daily active users in the U.S. a little bit lower there. Beats on earnings pretty nicely. Other than that, it was a really good earnings announcement. But that chose to be the focus there. And also ad rates going into the first quarter of this year. Ad sales in general expected to be lower. So they were trying to lower the bar a little bit for things going forward. Earnings tomorrow. Hang on, man. You got a lot. Caterpillar, Church & Dwight, Charter, Colgate, CVX, Honeywell, Johnson Controls, Eli Lilly. I could just keep going. You got dividends and dividends from Texas Instruments, $1.02. Paychex, 62 cents. Citigroup, 51 cents. Casey's General Store, 34 cents. And a little bit of shuffling going on in the S&P 400 and 600. I'll take a chance and try to answer some of your questions if I can. And try not to get you too fired up. How legal is it to force traders to not buy, then punish traders that are on margin? Force traders not to buy, then punish traders. I'm not sure how one affected the other in that question there. Although your all capital letters tell me you're serious. Yeah. Do you think AMD will go to 96 before February 19th? Gee, I wonder why you picked that date. So AMD 96 February 19th. Yeah, I mean it's enough of a range where that stock can move in that range in that time. I worry about the semiconductors being extended here. So look, even if you get a little bit of a rally in the semiconductors, it's not one of those rallies you expect to make new highs. So I'd be a little concerned. If it's a long spread or a long call or something that you have, then at this point, are you going to do anything about it? You know what I mean? I mean, you can afford to sit and wait. Your risk is defined there, February 19th. You said 96, I think. Oh, all right. There's still some money there. All right, so you got a week or so to kind of make up your mind there. You hope it starts bouncing from here. Yeah. Yeah. I love it. I saw politicians getting along today. They were both agreeing with that, trying to gain some favor with the little guy there. By the way, great virus data. You got cases dropping, deaths they've dropped a little bit, I guess, depending on where you're looking, but you got some really good data there. Let me see if I can find it, because I was going to try to share it with you here today, and then I got stuck in traffic and all that stuff. Confirmed cases down sharply. 7-day moving average is lower than it's been since November. You've got positive test rate, obviously sharply lower. Deaths haven't dropped yet there. Hospitalization rate basically peaked at this point. Sharp sort of reversal there. Back down to November 2020 levels. So looking good. I mean, that's positive news, right? Yeah. You notice that you can no longer look up short interest on interest. Maybe that's your platform. Nothing should have changed there. Yeah. I mean, it may just, depending on what stock you're looking at, right? Did you see some of the names out there today? I like it. I know. Uh-oh, gonna start the virus stuff there. I love it, man. There's a lot going on right now, huh? You like the pullback in Lockheed Martin? Yeah, there you go. Haven't been back down here in a while, right? You're getting like 1 year, almost 1 year discounts here, 327 or so, and it's starting to get attention. I noticed a couple articles, a couple posts on TV there, people talking about, hey, what's up with some of these defense stocks, man? Just starting to pull back, getting a little bit cheap here, right? The more you have that start to make its way into the headlines, that's a good thing for the buyers. Yeah, I love it. You still long on your SPY? Got a little hedge on there? Yeah. I don't get the hedge thing. Why not just have less of a position? It's a retail thing, the hedging thing. It's yeah. I heard you can't even look up the ticker symbol, huh? That's wrong. Personally, I think that's wrong. There's nothing wrong with a company saying, if you want to buy the stock, it's on you, right? We're not going to let you leverage it in any way. Shorting it's a different story. It's always been hard to borrow. Yeah. You bought some Apache today? Cool. Got your pullback right there. Nice little, notice how everything sold off today. Apache didn't. So that's a good sign. You got the price of oil down another 1.5%. Apache choosing to hold tight right at the 50-day. You got support, right? Obviously, traders using the same support area that you're looking at. I like it. Yeah. Yeah. That's cool, man. I like it. I will wish you well there. If they did, I didn't see it, T. You're able to start buying. You did? Oh, they changed back, huh? Limited buying there. I wonder if that was a technology issue where they didn't have the technology to deal with that. Yeah. I see GameStop 260 something, 262 after hours. Let the games continue. I love it. Yeah, right. Now they're done. Got the shorts got a chance to at least get out. Now they're like, all right, have fun with GameStop. Do what you got to do. We're moving on. By the way, I don't really care where you stand on that. If you think you have something against hedge funds or whatever, but to me, the only real argument here is on the hedge fund side. So the retail trader should be able to just do whatever they want to do. Whether you think they're sophisticated or not, it's on them. It's their dollars to realize what they're buying or shorting or spreading off, if that's what they're doing. That's their responsibility. There's a real sad story about the Robinhood trader committed suicide because he didn't realize how his spread would affected himself if he were to get assigned on one side. That's the extreme. Obviously there's a lack of education there that we somehow got to address. But on the hedge fund side, I totally buy their argument. They're basically saying we shouldn't have to report our positions. Right now they got to report their positions, they get published. So there's the solution, right? Just treat everybody the same. I don't have to report positions, you don't have to report positions. Why should a hedge fund have to report positions? They should have to report them to the SEC maybe, I agree with that, but why should they be published? Why does it need to be public? Let the SEC just keep the information. If they see something wrong, then go for it. So I think that's gonna be their argument. How that goes, I don't know. I don't I don't get to make decisions on that, so not my decision, but I think that's their argument. Like, and look at I talked about this earlier. Warren Buffett. Everybody that buys these stocks, they find out what Warren Buffett owns. He bought it 3 months ago, so that's fine if you want to follow something like that. But why does that have to be public? It should be discussed on that end so that the playing field is level. A retail trader can buy, sell, short anything they want. So can a hedge fund. And if you feel there's manipulation going on there, then you can organize, take action, and do all that stuff that you want. But, whoa, I don't buy some of the arguments people have on, especially from the CEO of NASDAQ. Ugh, that's a tough one there. But I don't get it, man. Yeah, I don't get it. And to short something above 100% is totally legal. Yeah, it may not be something you agree with, but it's totally acceptable, right? So that boils back down to people getting mad at presumably people that had money, I don't know how they made out with the trade, for doing something that they're totally within their power to do. And it happens all the time. It's currently happening on other stocks. So the game is being played. In this case, the retail trader won. And hats off to you, right? There's always a winner, and well, most of the time there's a winner and a loser, right? In a zero-sum game, if that's what you're playing. And so, okay, you guys, the little guy got the best of them, and it's fun. It's something to celebrate there, but it doesn't mean we have to change rules. That, come on. If you're bigger and you lost billions, that's no different than someone losing thousands that's a retail trader. Right? Both losses have to be accepted. You accepted the risk, you played the game. You sign the agreement when you open your brokerage platform that you understand what you're doing. If you want to trade on margin or leverage a product or one of your investments or loan them out so people can short, you sign an agreement saying that you understand all of it. And the agreement explains everything. So I don't feel bad for either side in this case. Hedge funds lost, apparently. Maybe the next time the retail guy loses or something. That's the name of the game. And I have a feeling the hedge funds will be okay. Sure, they'll be fine. But still, nice to keep them on their toes, huh? I like it. Well, hey, I'll get out of your way. We got a class tonight. Wine and Wealth, come join us there. Is it going to be wine or what's it? Oh, it's going to be Buffalo Trace. That's what it's going to be tonight. Buffalo Trace. I'll see you guys later. We'll go over really anything you like, but we'll cover the dojo, changes there, take all your questions later, and I appreciate the rest of you joining us here. We'll be back tomorrow. Enjoy.